I'm joined now by David Bahnsen. He is the CEO of the Bahnsen Group. You see him often on the business channels, but I like to deal with him. He's not my sponsor. He got no connection to the show. He's just a longtime friend. Good morning, David. We are in the midst of a worldwide financial meltdown with Taiwan stocks down almost 10%, Japan having a sell-off, and the futures in the United States, the Dow down 2%, the S&P down almost 3%, the NASDAQ down 4.5%. What's going on?
Well, you will be able to brag about the clip on your own show from exactly a month ago where we talked about this very thing, tech overvaluation that was due for a reckoning, and it's come in spades in the last 3 weeks. It's intensified in the last 3 days, but that's exactly what this is an overvalued market in one sector, technology, melting down. And because of the index concentration being so overweighted, so top heavy, it's bringing down other things with it. But when you say financial meltdown, Hugh, I would be very careful to point out bonds are rallying like never before. Very rarely have we seen a bond rally this severe in 2-3 days. So a financial meltdown like '08 was crushing mortgage bonds, corporate bonds, and of course the stock market and housing. This is a stock market meltdown, much more like March of 2000, where value stocks were doing okay. The bond market was doing fine, but the NASDAQ got crushed. What we're seeing right now is the AI version of that.
Now, David Bahnsen, this morning, the 10-year Treasury is at 3.748%. That's significantly below 4%. First time that's happened in a long time, where I began on Monday with the bond market, the 10-year. Will that instantly translate into lower borrowing costs for home purchasers?
Will it infinitely do so or imminently do so? It most certainly will. Now, it has to be sustained, and the Fed, of course, is going to be cutting rates soon, and mortgage rates will have a little time to catch up. There will be a lag, but mortgage rates will be coming down, and my suspicion is that will be the catalyst to help clear the market, and it will be a two-step process, that there will first be a little rally, as some people think, oh, wow, lower rates, house prices higher. And then I think that the overvaluation of housing will be due for a bit of a reckoning too. Asset prices are mean reverting, Hugh. They come down to a central median valuation over time. House prices are too expensive, but high rates have delayed this day of reckoning.
Now, how much of the readjustment of the market today, David, is linked to both the Kamala Harris candidacy and all that it means, and Iran's threat to attack Israel later today?
So the Iranian threat, like all geopolitical tensions, always lingers. There's a sort of permanent risk premia embedded in markets around geopolitical tensions, and that thing can escalate and exacerbate volatility at different times. You're a little bit older than I am, Hugh. There's never been a time in your life where there hasn't been this embedded geopolitical tension. We enjoyed what people call a peace dividend after the Cold War, before 9/11. And I think it did take a little bit of volatility out of markets in the 90s. But most of us who know human nature and know foreign policy know that this is a permanent condition. And Iran attacking Israel in the next 48 hours exacerbates volatility more than just the existence of a jihadist threat, for example. But I think that's a permanent factor of risk markets. The Kamala thing.
Now, David, I don't give financial advice because I don't know anything about finances. I trust other people. You do. However, I do give my own children one piece of advice, which is never sell an asset during a panic. Do you agree with that?
I absolutely agree, but I also agree with the other part of that, which is never buy an asset in a hype, euphoria, in a kind of craze either. So don't sell in a panic and don't buy into insanity. Much of what we've seen in the tech, big cap growth, AI space has been the inverse of that. Both of them represent bad sides of human nature. Yes, Hugh.
Now, last week I saw the Microsoft earnings and the Amazon earnings come in, and they were double digit, and the stocks both fell. So what is that, David?
Well, it's exactly what happens when something is overvalued or priced to perfection. If you were to go to your favorite steakhouse right now and a really, really good steak that, let's say you go to nice restaurants like I like to, Hugh, and you're used to paying $60 for a good steak, and the steak was now $200, was the steak any worse? Did the steak go down in quality? No, but it didn't go up in quality either, and yet it's 3 times the price. That steak is going to come down to a lower price at some point, but it has nothing to do with the quality of the steak. And earnings, that when they get priced into perfection, then stock prices have nowhere to go but down. The analogy with what you saw at Microsoft last week in history was Cisco in 1999. Cisco never had a bad quarter. Cisco never fell off fundamentally. They continued to deliver the network servers and routers that made it the backbone of the internet in the late 90s. The only problem that made it go from 80 to 10 was it was way too darn overpriced. NVIDIA, Microsoft, some of those companies probably face a similar thing here now, Hugh.
Now, David, I want to talk to you a little bit about the article that Mary Walsh wrote over the weekend for News Items on the commercial real estate collapse. And this isn't the clearing of a bubble. This is not the ending of effervescence. This is a collapse. How far flung are the impacts of the commercial real estate collapse?
Well, if you want to ever make money in commercial real estate, then find a way to bet the people that talk about collapse, and you will win that bet every time. Because one of the most bizarre things is creating a monolith around one of the most complicated and diversified asset classes in the world. Is the Class A space in Manhattan in a collapse that's signing at $180 a foot leases right now with 0% vacancy? Is Class C space in San Francisco in a collapse where you can't get anyone in an office? I'd say so. Self-storage, data center, hotels, industrial, multifamily. This is not one asset class. A significant part of it is thriving. A small part of it is hurting, and banks are the ones holding the ticket. They have to rework the loans. There will be great opportunity out of it, but bad assets are not going to recover, and there's going to have to be foreclosures. But foreclosures are going to be single digits, Hugh, single digits. And that's at the worst case scenario. So I don't think it's systemic at all, and I do think that some parts of commercial real estate continue to perform very well.
Okay, last question. How long does the market sell-off in Asia go on for? I'm not really worried about U.S. markets, but Japan and Taiwan do worry me because of regional risk.
I want to come back on your show, and you shouldn't have people on your show who lie, so I'm not going to answer the question because I don't have the foggiest idea. I'm not a liar. I don't know, and nor does anybody else. So anyone else who does answer the question, just know that they're making it up too. It could pivot midday today. This could go on for months, but nobody knows. But what I will say is, from a valuation standpoint, NVIDIA dropped 25%, and it was then trading at 69 times earnings. This could go on for a little while, Hugh.
All right. So in terms of the overall financial market, how much of this has to do with the risk posed by Kamala Harris as president?
Yeah, well, look, I don't buy the notion that we're ever able to label, oh, this politician did well, this politician did poorly, this thing is going to hurt, this thing's going to help markets. There's too many counterfactuals over and over and over again throughout history. Some of our friends back in Orange County, Hugh, that hated me for saying this. But the stock market was up 8 out of 8 years when Barack Obama was president. It just doesn't correlate the way people think it does. Policy matters, but in this case, the markets don't think that they know who's going to win the election. All that has happened is, instead of it being a blowout of Trump beating Biden, it's now going to be a close race. I think it's a toss-up, personally. You know I'm a political junkie, but I will say this. If someone put a gun to my head, I'd still bet 51-49 Republican Senate. I'm praying that they can take Montana. We know they're going to take West Virginia. Even if they lose all the other ones, you're still looking at a Republican majority. So I always believe that if we have a president who wants to do bad things and a Senate to stop him, I'll take it.
Well, I agree. Paralysis is always good, but I prefer to have Donald Trump with that Republican Senate because judges eventually do matter.